Hello and welcome to Tracking Trends with Nikunj Dalmia on the show where we will ideate and we will essentially debate that what's the way forward for Indian markets. Where are the pockets of opportunity? Where are options in the market where you can actually make large gains? Now, before we get rolling on this show of Tracking Trends with me, Nikunj Dalmia, let's look at the market setup. 21,000 continues to elude the Nifty, even though we've recovered from the day's low. Broader markets also are outperforming, and for a change, it is not only about Nifty today. Auto, ancillary, pharma, and PSU banks are gaining. Thank you, BOI. Everyone is saying that. I mean, that big tweet from Madhu Kela also seems to be pretty much endorsing what's happening in the banking space. Just think about it, guys. I mean, 2018-19, the banks were recapitalized. They didn't have money to grow. And today, government had to force 80,000 crores. And now, the same banks are raising money and the QIP is getting oversubscribed. That's the interesting bit about the Indian banking sector. For a sector which was considered to be the ugly duckling, now it's considered to be the swan. And metals and FMCG are also on the back foot. But it's not about banks today, in case you're wondering that why am I speaking about banks? Well, that's a context-setting tone because banks are making a comeback. So the big question you are asking on this edition of Tracking Technicals, can Nifty scale to 25,000 by general elections? That's the first question. Now, it's a bit of a tall ask, more like a high watermark. Discussed this yesterday. Kunal feels it could happen. Others don't. I'll reserve my opinion on Nifty because I'm not the expert on Nifty, but I know for sure that the trend is headed higher. How much can the trend be in our favor? And are we in for an exceptionally strong year beginning rally? If history is anything to go by, markets have always gone ahead of markets. We've got a nice Nifty poll, and we've got this on a Twitter handle. I'll encourage you to also go and participate there. We are not going to be closing this poll, but so far this is the poll what we've got. Overwhelming consensus seems to be indicating that Nifty could actually go between 21,000 to 23,000 by elections. 22% feel that it could actually stay where it is, and 24%, that's the second biggest number, feel that it could be at 24,000. Kunal is of the view that it could be 25,000. So Kunal, clearly you're the biggest bull, right? You're lacking this reputation, right? A reputation that you've been calling for like a big breakout, and 21,000 becoming 24,000.
Correct.
25,000, that's 4,000.
Correct.
So December, January, February, March, April. May तो election आ जाएगा,
ठीक है,
तो 5 महीना. So you are essentially saying that markets actually could have a run rate of 1,000 points approximately, 800 points approximately. Correct. Every month.
Correct.
Looks very tall, isn't it? I mean, like a high water. I hope it happens.
No, it looks like a tall,
tall watermark
for the markets. But then we have to look at, and you were rightly mentioning a point that we have to look by what has history given us in terms of examples. And the classical way to do is look at the last 10 years and 12 years of history on the charts.
Okay.
This is the Nifty chart. This is the indicator which I have mapped up.
Which is this indicator?
So this is a proprietary indicator which I have developed.
That's your indicator. This is your work.
This is my work.
Nobody can copy it.
Nobody can copy it. It's not available in any software. Okay. And this helps us give the big directions on the markets.
It's available on ET now to analyze.
So these give us a precursor of where the next set of trends lie for the index and how the index tends to shape. Now we'll go back 10 years back, 2013. Now a classical way to look at it is when this red line gives a crossover in terms of a breakout, that's the first sign that we are coming out of a major correction as well as the start of a bull market. This is in 2013 end, so it's somewhere closer to September, October. We had a breakout closer to 6176 mark. This was the monthly closing chart for the index. What followed 6 months from there was we came back towards, I think, some 7,700, 800 levels, which is a meager 20-25%. But then again, just to give a fact that post that also the market saw a continuation rally. 2017, very similar kind of a breakout. Index was 95-20 mark.
You'll have to activate your pen, I think.
Yeah. So, yeah. 2016, again a 17 similar breakout. 6 months from there, we managed to move up higher. And 9 months, 12 months from there, we managed to move up.
Where are we right now?
Consistently higher. That's the best part about it, Nikunj, because currently we are at a point where the index is showing a kind of a breakout.
So technically, if I may borrow the pen, where what you're saying is that we are the beginning.
Exactly.
Okay. And this
is the third point.
Is the beginning. And this entire part will be captured.
Yes.
What is the accuracy of this indicator?
So far, over the last 15 years to 17 years, it's given like a 95 to 99%
So
strike
your
rate.
indicator has a 95% accuracy. But what happens to that 5%? What if that 5% comes?
So even if that 5% comes, the index plateaus.
Okay.
So like for example, I'll show over here, even if the breakout happened, we had a 3-4 months of flat movement before we moved up higher. And that's why with a window of 6 months, there is a higher probability that even if we go through a pause for the next couple of months, the direction, this sets the direction for the markets. Momentum is something else. That's where we look out for RSIs and etc. This sets the direction, that the direction is on the upside. And given a band of 6 months, we are looking at least a 20% swing, which happens.
Okay, so let me make a range. The bull case scenario is 2,500, right?
25,000.
25,000.
Correct.
Pardon. This is the bull case scenario.
Correct.
What is the bear case scenario? The least.
15%, so maybe around 23,000.
Okay. So if I say that you are of the view that Nifty would be between 23,000 to 25,000, that would be a fair assessment.
Exactly.
And 95% accuracy, guys.
Yeah, and this tells us that we are at the start. It's not that we've ended the rally after 2 months of great.
You know, reminds me of my son's drawing sheet, right? Sketched it so beautifully, but that is very important. I'll give me a high five for that. Thank you very much.
Thank you so much.
Right. So let's just take another important aspect. Now, for markets to go to significantly higher levels, of course, there is a tailwind called politics. Of course, there is liquidity. But for liquidity to fall into place, you need global cues. US interest rates are bottoming out. Topping out. Crude has topped out. These are two important factors which in a sense are going to be important. Now my next guest on the show today, and a very dear friend of mine, Manish Dangi. I've learned a lot from him over the years. He called me in September 2020 and said, okay, Nikunj bhai, it's time to buy small and mid cap stocks. And I said, nah, middle of COVID, you don't go and buy small and mid cap stocks. But his theory, which was centered around mean reversion of asset classes, has really worked like a charm. He was forefront in 2021 in calling out that interest rate spike are going to be impacting the bond market, and then we will see a big spike in bond market. And it actually happened. So his macro analysis in terms of setting the asset allocation, I think, has been right. And there's a bit of a time I think he's taking to adjust. अपनी तारीफ सुन के सब हिल जाते हैं, तो मनीष भाई भी शायद तारीफ सुन के अपनी हिल गए. आवाज आ रही है?
Hi Nikunj.
आपकी तारीफ कर रहे थे that how you've got the trends right.
आपकी तारीफ कैसे करूं मैं? आपको बधाई हो for your son's achievement in Korea on live on TV.
No, thank you very much. Your son also achieved something, so congratulations to you as well. Thank you very much. They're two proud fathers who are talking to each other. Nothing to got to show. It's our friendship, the bro bond which me and Manish actually have. Okay, markets. You are of the view that interest rate in US have peaked out. You are of the view that one should actually now bet on strength of rupee, and you are of the view that the best way to bet on asset allocation right now is to go for credit market rather than bond market. Is that Manish Dangi, the bond guy who's talking about credit market, or this is Manish Dangi, the asset allocator who genuinely feels that it's time to go to bonds?
See, basically, I mean, my general view of looking at things, and which how a commonsensical approach, Nikunj, ki jo sasta hai is you go after, and so at various point in time, Nikunj, sometimes equity, sometimes bond, sometimes credit, sometimes dollar, sometimes INR. So you sort of try and move your pack in assets in a manner that your key objective, Nikunj, is what? To do a little bit better than Nifty over long periods of time, So there are only two approaches, Nikunj, to actually outdo Nifty. One is to actually do what you sort of often talk to most of your guests, which is pick up right stocks and make a good portfolio. Another is to sort of churn from one asset to another and extract a little bit extra risk premium. So I do the latter way. And so which is why it's an asset allocator calling for, the credit risk is sort of very, very juicy right now in India. Currency, of course, I'm actually after very long, Nikunj, I've been bear INR. I mean, anytime you would have spoken to me over the last 10 years, I would have spoken against INR and for dollar. I think we are entering in a decadal, after US recession, of course, but perhaps 5-10 years of a bear market in dollar. So for a timing guy, you ought to wait a bit for US recession because US dollar is a counter-cyclical currency. But my sense is that 5-10 years would be great for INR. That continuous 3-4-5% depreciation would pause. It will not reverse, of course, given the inflation differential, but our currency will actually be sort of rock solid for very long in whole of 2020s.
Rupee is at 82.5, almost 83. Do you see next 3 years it could give a CAGR appreciation of 3 to 4%? It could be closer to 77, 78.
No, because so you see, to think of it like this, basically rupee it has a combination. One is a rate at which it is transacting vis-a-vis dollar, and then the currency and the bond yield level. So Indian bonds, of course, are higher. So so if you are a currency trader, you would look at if the currency stays stable also at this level for 5 years, you would end up making 7% in dollar versus what you're getting, let's say, 4/4 in dollar in US Treasury. So when your currency does not depreciate, it effectively means that it becomes a charm for everyone else. It's become a carry asset for you, for everyone in the world. So for a very long time, Indian currency has been steadily depreciating, especially after 2008 for good 15 years. I think we are entering in a setup in which, and not lots to do with INR, but more to do with US dollar because it's exorbitantly expensive now, almost 30-35% on a PPP basis. So that's the point I'm saying that as an Indian investors, you are always worried that even though Nifty may do 15%, but if my currency depreciate by 5-10%, my net returns in dollars are low. And that's the point I've argued many times on your show. Maybe after the US recession, we will enter in a setup where, INR assets, both bond, credit, as well as equities would actually look better than dollar assets.
If one is bullish on Indian rupee, in equities you can start a SIP, but in rupee you cannot do that. You can only buy it in futures. So what's the best way to participate?
No, its best way to participate is Indian carry. Okay, so for Indian investors, if I put out views on INR is because for the global investors that I talk to, that it's time I am actually costing them 5-6 months ahead that look, there is going to be depreciation in Indian currency for next 6 months, perhaps because of the US recession. Because as I said, US recession means counter-cyclical strength of dollar will get reflected. So Indian currency may still depreciate by 2-3%. But I am sort of simply telling every investors abroad that whoever I talk to, of course, is that now it's time to sort of begin to rethink that the 2010s won't play out in rest of 2020s. That our currency may not depreciate as steadily as it did for a variety of reasons that it did. So that's for a global investor. For local investors, this whole thing, all of us, we've discussed about it, of international investing has been because yahan hamesha currency depreciate ho jata hai. So you don't have to do it, just look for Indian carry, be it credit or Indian 2-3 year bonds, or if let's say India also starts to cite some slowdown at some point in time, then Indian bonds, 5-10 year bonds. So that's the way to sort of play this USD INR. If you're a punter or speculator on USD INR, maybe right into the recession you should go short dollar. That's the way the punter or speculator trade would be.
Or short dollar or long rupee? I mean, they both are pretty much the same coins, same sides of the same coin. Okay. So I'll wrap it up with a very quick take, maybe a 1 minute take. Today we are celebrating crude is down. We are happy that yields have come down from 5% to 4%. But is this more like a canary in a coal mine and harbinger that recession is coming around the corner? It is more dangerous than what we think.
So a US recession is bad news for US equities because the EPS are not baking in almost 10-12% increase in S&P EPS is baked into by the market, and they'll be surprised there. But US recession, if it is a soft one, which is more or less given, I've argued about it for last 2-3 months with you, is not a bad news for India, because the lot of macro unnecessary stress of strong dollar, crude would actually wither. And that would actually be a good setup for local macro, because just a small point here that Indian business cycle is at a different stage, Nikunj. Indian business cycle, we are not, if at all, we are in a little bit of a mid-cycle, whereas US business cycle is pretty stretched. So if it has a recession, India has a little bit of a dent on valuation, but from a pure economic standpoint, it's not a very bad news for economy.
It's a pleasure to have an Nitina. With the simplicity with which you always make up a complicated macro scenario for us is actually incredible. So there you go. That was Manish Dangi on the way how things could really evolve for the macros. Now, US recession around the corner. Well, don't worry. Historically, it has always augured well for Indian equities. Telling you history that decline in interest rates and recession in US means decline in rupee flows back into India, and that template is always favorable for India. So like we've been saying that kahan jayenge FIIs. If this setup continues, trust me, we'll be forced to make a comeback. On the show today, when we come back, Sanjiv, Bhasin, and answer to some of your queries. We've got a lot of queries now, very stock specific, sector specific, but I promise we'll try and accommodate as many as we can. So right after this, Sanjiv, Bhasin, and we'll answer some of your queries. Now for your queries, and the first one is from Prakash Jadwani. Prakash has a query, and I'm just going to read off the query first and then go to Sanjiv for his thoughts. In the present leg of Nifty to 22,000 plus, in the next 4 to 6 months, what are your views on Reliance? Will the stock underperform? If yes, what would be the reason behind the underperformance? Sanjiv, there used to be a time when we would say only Vimal, right? The old tagline for Reliance said only Vimal. And it happened. A couple of years ago, Reliance was the only one which was making money. Large cap stocks were making money. Now the reverse is happening. When do you think the Dalal Street Bulls will start saying again, only Vimal, only Vimal?
Yeah, good afternoon, Nikunj. You are right. But, Reliance did nothing for 10 years, but in 2 years, it made up for that 10 years. So now I think there is a lot of sectoral rotation and Reliance is taking a backseat. But please do not underestimate Mukesh Ambani. I think he's the most smart businessman and he is slowly but surely diversifying his assets. O2C Chemical has become cash free in the infrastructure, in the expenditure, and now is a cash churner. So is Geo, and now his retail is playing out excellently. I am now betting on his new energy play, which can be very, very strong. So sum of parts, I think the next 6 months actually belong to Reliance. I wouldn't be surprised if we get 3,200 on Reliance before this election. So that's about a 15% upside. And I would definitely think this is one large cap which you must own in your portfolio in this consolidation.
So what should Prakash do? Add more or just stay with his positions?
No, he should do a SIP. I think a SIP in Reliance is very, very good. If you can do it on a weekly basis, excellent, or do it on a monthly basis for the next 6 months. You will definitely make more money in any than any other large cap.
Okay. Next question is from Sridhar. And here's the context here. He's bought 320 shares of Bank of Baroda at 211. Now, just folks remember that 2018-19, the government had to infuse 80,000 crore 5 years ago, inflation adjusted could be 95,000 crore to bail out some of these banks. BOB, SBI, even, I'm not even getting into the line of smaller banks. Some of the banks were put by Reserve Bank of India under a framework where they were not allowed to lend. I mean, that was the sorry state of affair for the banking sector. But look at the turn. A sector which was called as the ugly duckling was bereft of capital. Government has to infuse money. They came at sub-book. It was more like a necessity and survival. Today, BOI, QIP in this week has raised a phenomenal table-thumping response and a response like never before. So the tide has turned for PSU banks. But I'll be specific with Sridhar's query here. And Sanjiv, Bank of Baroda at 211. Specifically for BOB, is it a good idea to buy and stay put?
He has bought at the top of the rally. So Nikunj, give it more time. Bank of Baroda results have been the most stellar after CanBank and PNB, and I think it will continue. But they have an overseas business which is not doing all that well, and they are in the process of shutting down some of those, which will add to the cost. I think Mr. Chadha has actually turned around this bank, and fintech has done extremely well. I would say you could see for a target of 240 to 245, but like I said, you are in it at the precarious moment of just on the cusp of a new high. So obviously new highs are going to be challenged and there can be correction. But I would still think you have a 10%, 15% upside in this stock. However, if you want to balance out, I think some of the large cap banks, particularly ICICI and Kotak, are giving you a very good entry point where visibility of earnings and future prospects seem even more brighter.
All right, Bhasin Saab, always a pleasure. Pleasure to have you, and thank you for answering our viewers and just giving them very pinpoint advice in terms of what they should do and what they should not do. Now, two questions which we set the tone for for our viewers at the beginning of the show, and I would like to revisit both those both those questions because we found some answer. Kunal feels that a possibility of 25,000 ahead of election 24 cannot be ruled out. He feels that technically the breakout has just happened. And poll also what we've got, there is a 25% respondent who are also saying that there is a strong possibility of that to happen. The second question which we in a sense debated and deliberated with Manish Dangi on the show was bond yields are down, crude is down. What does that mean for India? Well, that means that a recession in US could be around the corner. 2024 could be an ugly year for US economy and US equities could come down, but that means that India actually is going to benefit. He feels that Indian currency is entering into a bull market, and when currency enters into a long-term bull market, the state of the economy in terms of pricing power will always increase. So that's the second question which we've debated and deliberated. So thank you for tuning in and thank you for making the show as part of your daily life. Next 1 hour, well, not last but one trading day. It is FNO picture which could be at play when it comes to the last 1 hour of trade today.